What's going on, you guys? This is Aaron from Departures Capital Analysis, and welcome to this week's video. We've been really busy, guys, and I apologize. I missed one more week, so we're back with another analysis video. And in this video, we're talking about the uranium sector, more specifically Cameco. So we're going to get into the fine details, or at least go a little bit more in depth on Cameco. We're going to take a look at their financials. We're going to take a look at the uranium sector, see how some of their competitors have performed recently. As you know, uranium is one of those really hot commodities along with the energy sector, but it did go through a pretty brutal rut ever since that whole Fukushima issue. Uranium has been some countries like it. Some countries said they're going to stay away from it. I personally am a uranium bull. I think that it's a really great way to generate energy, but that's just my opinion. You're open to your opinion. Once again, this is a brand new channel, so if you do support me, the channel and all the videos, which I have been noticing that we've been growing decently, don't forget to leave a like. It means the world to me and it helps my videos so very much, along with hitting that subscribe button. Let's get this channel to 1,000 subscribers. I would love to see that. Obviously, I just make one video per week for this channel, but I look forward to growing it. And drop me a comment down below. Let me know your thoughts on the uranium sector. Are you bullish? Are you not? What's your favorite sector? What requests do you have for future videos? And let's get straight into it. So the first thing, I wanted to talk about was quickly my watch list. And I shot this video Wednesday, February 2nd. So it'll probably be out at least by the 4th. So when you're reading this or when you're listening to this, it could be a day or two late. But I have noticed some volatility in the uranium sector, of course, in the stock markets in general. So it was a red day for the uranium sector. But let's take a quick look at Cameco to see how the stock has performed over the last 6 months. So 52-week range of $16 to $35. It's well off those highs at 25, but still up substantially from those lows of $16. Now, I remember talking about Cameco and the uranium sector when it was right before, not in the $9 level, because that was back in 2020. But I was talking about Cameco, and we had Peter Grandich on the channel actually talking about uranium, of course gold and silver, but more so uranium. And since then, the stock has been on a pretty nice run. I will say, however, at least for the 5-year charts here, Cameco does look pretty good. Now, we take a look at the 1-year chart. We have bounced recently off of what looks to be like 23.5. So potentially a level of support. I'm no chart expert, but 23.5 does look like a pretty interesting level, at least on the 1-year chart. Once again, this is not a deep technical analysis video. This is more so a deep analysis video when it comes to the sector, the fundamentals, the company itself, what they're up to, and then of course their financials, and why I think that Cameco and the uranium sector or why I'm bullish on the uranium sector. I'm bullish on the uranium sector just for the global demand for energy and how are we going to create it. Obviously, coal is off the table, or they're phasing out coal for the most part. Renewable energy is definitely in style, but the cost to set it up and how much it costs to generate the energy and how much energy can be generated from that for massive growing nations like China and India and countries like that. Renewable energy would cost a ton of money because their power need is just so gigantic. But in terms of uranium, I personally think that it is a great way to generate a lot of power if it's done in a safe manner. So obviously safety is the most important thing. We've got multiple instances like Chernobyl, but of course, we've learned from that. We've got Fukushima, we learned from that. So it's just like, I personally think that having nuclear power, in the mix of the whole global energy production, I think it's a great way to generate energy, but that's just me. So let's quickly get into Cameco, talk about what the company's about, just for a quick little refresher. So Cameco is one of the largest global providers of fuel needed to energize a clean air world. So I like how they're saying clean air. They're kind of targeting that. So our tier 1 operations have the licensed capacity to produce more than 53 million pounds of uranium concentrates annually, backed by 461 million pounds of proven and probable mineral resource. Backed by 461 million pounds of proven and probable mineral reserves. We are also a leading supplier of uranium refining, conversion, and fuel manufacturing services. Our land holdings, including exploration, span about 1.7 million acres of land, the majority near our existing Canadian operations. So they've got operations, all across the globe, not just here in Canada. However, they do have They do have the majority of their operations here in Canada and America. Quick little history about the company. For 3 decades, Cameco has been safely and reliably producing uranium and nuclear fuel products to generate electricity at the world's nuclear reactors. So this is their investor handout for the third quarter of 2021. I simply wanted to go over a few things. Just, the key points. Tier 1, low-cost, high-grade mines in Canada and a joint venture in Kazakhstan, long-time operator license permitted with significant reserves and resources, vertical integration across the fuel chain, investing in digitization and automation. Contract portfolio, as we know in the mining business, especially for a producer of a commodity like uranium, having contracts is very important. So long-term diversified contract portfolio with customers around the world, average 20 million pounds per year over the next 5 years in sales. Contracts have provided price protection and leverage to rising prices. Strong balance sheet, ability to self-manage risk and execute strategy. And in terms of ESG, over 30-year commitment and performance, focus on health and safety, environment, community, and governance. So we will be taking a look at their balance sheet, guys, and taking a closer look at the financials. So by 2050, global demand is expected to increase by 75% from 2020 levels. So that is electricity generation. Demand's obviously going to increase. So what is important about nuclear energy? Designed to operate for long cycles, carbon-free, safety, reliability, baseload, backup systems, fewer people required at site, strategic inventory to guard against supply disruptions. So let's get some information about the uranium market. So 51 reactors under construction. Where are they being constructed? Like I said, China, Asia 9, Europe 9, India 6, Africa, Middle East, Europe and Russia 3, and America and Canada 2. So 52 operating, 14 under construction. That is China's reactor fleet. So like I said, growing global energy demand. So let's take a look here at, the number of reactors versus their production of uranium. So China, 4 million pounds with 52 reactors and 14 under construction. There's a huge disconnect there. Canada, 10 million pounds of production with 19 reactors. You could say that we're sitting the best next to Australia, who has 0 reactors with 17 million pounds of production, or, Africa and the Middle East, 22 million pounds with 10 reactors. But we can see here that there's multiple markets that are going to need uranium, like Russia, 7 million pounds, 38 reactors. Russia, China, Europe, minimal production, 140 reactors. Like Europe has the most reactors with minimal production. I definitely think that there's strong fundamentals here for the market. So 41% year-to-date performance for spot uranium. Now, once again, these are 2021 statistics straight from their website. A little bit outdated, but I'm just working with the data that Cameco has provided. So preserving tier 1 production, this is part of their strategy. Strategic purchasing, strategic patience in contracting, strengthen balance sheet with conservative financial management. So I just quickly want to talk about their operations, and then we're going to dive into their financials, and then we're going to give my opinion on the company, where they go from here. We'll take a quick look at the price of uranium, their strategy. So suspension of McArthur River Key Lake. Now is to preserve their tier 1 assets, removed 18 million pounds from the market annually. Restart is a commercial decision, acceptable contracts that will baseload our share of production, confidence that market conditions will allow us to benefit from favorable life of mine economics. So I quickly want to touch on a few more key points, and then we're going to dive into those financials, guys. Bear with me here. So tier 1 assets, licensed, permitted, long-lived, proven expansion capacity. Tier 2 assets, potential value in the future. Exploration portfolio leverages brownfields and vertical integration across the fuel cycle. and exploring opportunities. So in terms of their McArthur River, proven and probable, 273.6 million pounds. Cameco's share 69.8%. Cigar Lake 82.8 million pounds. Cameco's share 50%. The 2020 production was 5 million pounds, and the 2020 production of McArthur River was 0 pounds. So indeterminate suspension of that. In Kai, 97.5 million pounds, 7 million pounds produced in 2020, and 9 million pounds produced in 2021. And then finally, we have Fuel Services Division. So Blind River Refinery Port Hope Conversion Facility, Chemicals Fuel Manufacturing Incorporated. They own 100% production, 11.7 million kilograms of uranium, 11.7 million kilograms. 2021 forecast 11.5 million to 12.5 million kilograms. So what do they have? 455 million pounds proven and probable, 426 million pounds measured and indicated, and 174 million pounds inferred resources. So that's their resource portfolio. So keep that in mind when you're crunching numbers. But I quickly want to get into the financials now, because that is also very important and one aspect of our channel. So here we can see, guys, industry prices at quarter end. So the price for uranium has been jumping, obviously, from June 30th to September 30th. It jumped over $10. So let's take a look at the consolidated financial results. So in terms of revenue, it dropped 5% from 379 million in 2020 to 361 million in 2021. That is the 3 months ended September 30th. So with net losses totaling 18%. And, due to this suspension of their mine is my assumption. Now, someone looking at Cameco right now would be probably more interested in the future prospects of the uranium market. Cameco getting their mine back into production or restarting the mine and then cashing in down the road. Now, we see a lot of companies that aren't making money in the tech sector, high growth, mining exploration companies. So for a producer to figure out the situation and go backwards is not necessarily a bad thing. I mean, obviously, as a producer, it's weird to see such a large producer not producing. But at this point, investors are looking forward into the future. And obviously, if everything was to go back into production and the price of uranium keeps rising, Cameco could be set to make a ton of money. But overall, in terms of the 3 month ended September 30th, in terms of net losses, 18%, negative 18%. But in the 9 months ended September 30th, we saw a 14% increase in terms of, net loss versus net loss in 2020 versus 2021. So the loss shrunk. All right, guys. So checking in on the balance sheet here, cash and cash equivalents increased by 44% actually, from 943 million in December 31st, as of December 31st, 2020, to 1.36 billion as of September 30th, 2021, which is a 44% increase. So that is nice to see. Total debt stayed the same and inventory decreased by 36%. Here's a quick little note here. So total cash equivalents, and short-term investments at September 30th were 1.4 billion, or 44% higher than at December 31st, 2020, primarily due to the drawdown of inventory during the period. Net debt at September 30th, 2021 was negative 364 million. Total product inventories are 437 million compared to 680 million at the end of 2020. Inventories decreased as sales were higher than production and purchases in the first 9 months of the year. The average cost of uranium has decreased to $37.70 per pound compared to $37.95 at December 31st, 2020. As of September 30, 2021, we held an inventory of 8.5 million pounds. Excluding broken ore, inventory varies from quarter to quarter depending on the timing of production purchases and sales deliveries during the year. So 2020 versus 2021, 6.7 million pounds. No change in sales. However, for the 9 months ended September 30th, we saw a 19% decrease. And here we have cash costs to produce, which is actually pretty interesting because their costs are down 67%. There's all the notes in here for you to dive deeper into this. Cost of production, obviously, is very important as well, but that's not the main point of this video. The main point of this video is simply to take a look at the stock, give my opinion on it, dive a little bit into the financials. One thing I will say, from 2020 to 2021, it is nice to see that Cameco has increased their cash position. Their inventories have shrunk a little bit. By the looks of it, cost of production has decreased, but that needs to, I need to do more research on that. But as we can see here, guys, I mean, uranium has continued higher. So this is as of January 31st, 2021. The price was 43. There we go. There we go, guys. So 43.90, the price of uranium has continued to climb. Let's take a look at the 1 month chart. Obviously, it's down from there we go. This is what I want to see. So it bottomed in 2016 around $12 a pound, and it's been consistently increasing with a huge increase in 2021. So how high is uranium going to go? I feel like, around short term, my prediction is it could go, $50-$60 on the bullish side, so maybe another 50% upside. I feel like that would put in a nice foundation for companies like Cameco to think about increasing production. Obviously, that's the goal. The goal is probably not to have their mine out of production forever. So I'm sure, they're waiting for the right time. Overall, though, if you're looking for large cap exposure to the uranium sector and you're really bullish on uranium, I definitely think that Cameco, is one of the top stocks to look at in this sector. They've got a ton of production, they've got a ton of reserves, and the stock has pulled back from highs of $35 all the way down to $25, so it's down $10 a share. And if you're an energy bull, nuclear energy bull, you could say Cameco might be a stock to take a look at. Now, of course, I wasn't compensated for this video. The majority of these videos on this channel are just strictly for fun, for some analysis. I have always liked uranium. I remember investing into Denison Mines when it was around 50 cents. Wish I held on to it. I am becoming more and more bullish here on the commodity sector and the energy sector. Obviously, you guys know me for, many different sectors, MJ sector, psychedelic stocks, crypto GFi blockchain, but it is interesting to keep the resource sector consistent, and I do feel like there's a lot of potential for gold, silver, uranium. Of course, we're talking about uranium in this video, but overall, I feel like we're going to go into a big bull run for commodities. Cameco could, be set to benefit dramatically from that. We'll see what happens, guys. Let me know your opinion in the comments. If you have any other uranium stocks that you want to take a look at, if you're a super uranium bull, I'd love to hear it. But that's it for the video. Thanks so much for watching, and we'll see you guys in our next video. If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below along with thoroughly reading our disclaimer. Thanks so much for watching, guys, and I look forward to seeing you in our next video.